everybody. Hope you are well. Obviously, the markets have been very volatile, very negative the last few days. A bit of a bounce today. Apologies for not getting something out to you sooner, but I just got back from a trip with the family to Uganda over spring break. My father-in-law does some charity work there, so it was very interesting to check out some of the projects that they are working on there, as well as do some of the safari drives, etc. with the family. As mentioned, markets very negative, especially last Thursday and Friday, rebounding a bit today. Of course, the hot topic is tariffs, so I wanted to get into a few charts with that, and then some reasoning as to why I believe this could wrap up sooner than later, and that the rebound could be very quick. We'll go into a few charts here. So what they use to measure volatility in the markets is called the VIX. And when the VIX is high, over 50, as we saw at the end of last week, here's what happens in the markets. Usually it's a good positive sign when there's that much volatility. You can see here a bit small, but the 1 month return after the VIX hits that is the average of a negative 0.9%, but the median 0.7. You can see this is only going back to 1990, and the amount of times it's happened there, seven different times, a few times in that financial crisis. So higher 57% of the time 1 month, but of course that's short-term looking, and we are long-term investors. So looking out 3 months, 6 months, 12 months, much better average and median returns, and much better probability of being higher when there is that much volatility. Again, going back to 1990, bit of a short term. So let's look the top, breaking down the numbers that I just showed you year over year, and you can see again that 2008 number is where we got that negativity. But let's look back to 1950 and see what that looks like. So the 1 month is positive. If we go all the way back to 1950, and you can see the percentage returns and the averages all higher, 3, 6, 12 months, and all decent returns over those levels. So that much volatility usually spells positivity when we look out, especially if we look out into 6, 12-month range. One thing I wanted to point out, because this will probably be the next worry headline in the markets with these tariffs, that earnings and earnings per share are going to start dropping as we go through the next earning reports. But this chart showing you that in that financial crisis, as well as in the pandemic, you can see where the market drops at the top here, the market bottom, on that red line. And then if you follow that down, you can see that the earnings continue to drop well after the market bottoms in both scenarios. And that's usually what happens as those reports. The markets may be coming down. If you remember back in the pandemic, the markets started turning up much quicker than it seemed like the economy was going to grow. Earnings kept getting guidance downwards well after the market bottomed, but the markets continued up. So just because earnings are and earning guidance is going to start coming down based on these tariffs doesn't mean that that market can't bottom out well before earnings do. And last but not least, let's talk about these tariffs, and as mentioned, why I believe there's some signs of hope. We're seeing the markets rebound a little bit today. Even yesterday, we saw the markets bounce on news that there might be a delay in the tariffs. So let's look at a few items to give hope and maybe combat some of the headlines we're seeing. First, and definitely not least, is that Republicans want this to end. You're starting to see a lot of internal Republican commentary, lots of Republicans wanting this to end. Of course, we just had the large presidential election, but midterm elections coming in 2026, and there's some serious worries that if this continues, the Republicans are going to lose the House and even the Senate, depending on how long this tariff war continues, and if it drags down the markets and the economy any further, that could cause some serious issues. And internally, the Republicans are beginning to oppose the tariffs, none the least of which Ted Cruz from Texas. So that's a definite worry there. There are another headline, lots of negotiations beginning to happen. The markets are up today with news that negotiations with South Korea are going well. And that's all it's really taking for the markets to rebound a little bit. So the more stories we get of that, of course, countries have been talking about wanting to negotiate and get this over with. So the more news we get on that front that negotiations are happening and going well, the less uncertainty there will be out there. That'll help the markets. The stimulus is coming, so we've seen interest rates dropping already. In Canada, that will continue, but even in the US, the Federal Reserve is likely going to cut rates sooner than later, which will add to fiscal stimulus. And you're also seeing more stimulus being added by global governments to help those affected by the tariffs right now. So that will help. One of those, that will then lead into the next point, which is lots of worries about inflation. And it is a worry and something to keep an eye on. But on the other side of that, you're likely, with all this uncertainty, going to see consumers safeguard, spend less, and that'll help reduce inflation and maybe even move us into a world of disinflation. And one important factor there is oil, which we've seen drop dramatically. That's a big cost. With the price of that dropping, will help on that inflation front. And last but not least, because it's definitely in the headlines, is a recession. And not to say that we won't go into a recession if these tariffs continue for a long period, but at the moment, global economies are for the most part looking relatively strong. Unemployment is still fairly low, and as mentioned, there's going to be a lot more stimulus into global economies with the current talks. So yes, that is still a worry. Again, something to keep an eye on if these tariff wars continue. But if we can get some negotiations and a bit more of a resolution sooner than later, then there won't be as much of a recession fear. So again, like we've seen recently, all it's going to take is a bit of a flip on the rhetoric around tariffs. More talk about negotiations and deals getting done, going to reduce uncertainty, going to help the markets and help the global economies. And the big thing there, I mentioned a number of points, but go back to that first point, is that inside his own party, the Republicans are wanting Trump to wrap up this tariff war. And another election is always right around the corner. They do not want to lose seats, lose the House, lose the Senate, and that is, of course, very important for the party. So there is some pressure, and that is building. I believe the markets will, as soon as we get that resolution, the markets will flip quickly, and so I'm hopeful that that'll be sooner than later. And again, we're seeing signs of that today, but also yesterday on that 90-day tariff extension rumor. You saw the markets rip up very quickly. So I'll leave that there, and any questions, I'll let you know. I'll likely put out more videos, especially if things stay volatile more regularly. So I'll be back to you soon. Thanks a lot.